Every system needs a backup. Your computer's hard drive, the photos on your phone, even your passwords. Not because something's guaranteed to break tomorrow, but because if something does go wrong, you're not starting from zero. Governments and companies think about money the same way. That's why they hold reserve assets, not to spend day to day, but to help meet obligations and keep things running smoothly. For decades, those reserve assets were things like cash, government bonds, and gold. But now, there's a new type of backup entering the picture, designed for how the world works today: Bitcoin. I'm Bola, and here's what you need to know about Bitcoin reserves. A Bitcoin reserve is Bitcoin held intentionally as a strategic asset. It's not only for emergencies. It can be held to preserve value, to diversify, or simply support long-term financial stability. But why Bitcoin specifically? One of the biggest reasons comes down to value. Dollar-linked assets are designed to stay stable in price. $1 today is still $1 tomorrow. But inflation means its purchasing power often declines over time. So even if the number stays the same, what that money can actually buy tends to shrink. Traditionally, gold was the answer to that. It's scarce, it can't be printed, and it isn't tied to any single government. But gold has limitations. It's physical. It has to be stored, guarded, audited, and it's slow and expensive to move. Bitcoin is a modern answer to the same problem. It's scarce like gold, with a supply capped at 21 million coins, and because it runs on a public blockchain, the supply and transaction history can be independently verified and transferred digitally. These advantages are a big reason why we're now seeing Bitcoin adopted by governments and companies alike. In March 2025, the United States established the Strategic Bitcoin Reserve, formally designating Bitcoin as a long-term reserve asset. El Salvador is another well-known example. It made Bitcoin legal tender in 2021 and began purchasing Bitcoin directly for its national treasury. And Bhutan has adopted Bitcoin as part of its national reserves to support long-term economic development. But it's not just governments. Binance is one company example that's been in the news lately. As the world's largest crypto exchange, it holds significant Bitcoin reserves to ensure it can meet user withdrawals even during periods of market stress. And recently, Binance announced it's converting its $1 billion SAFU emergency fund from dollar-pegged stablecoins entirely into Bitcoin. SAFU is designed to protect users in extreme scenarios, but in practice, those funds are unlikely to be needed, and recent data confirms that. During recent market volatility, CryptoQuant tracked Binance's Bitcoin reserves and user flows. The data showed Binance holding around 659,000 Bitcoin, with reserve movements of roughly 0.6% and daily net flows staying within the normal range seen since mid-2023. So, even though the market looked volatile, the numbers showed everything was operating as it should. In other words, the reserve was doing exactly what a reserve is meant to do, sitting quietly in the background, allowing everything to run smoothly. Now, that doesn't mean Bitcoin is without risk. Prices can fluctuate and volatility is real, but reserves aren't about day-to-day moves. They're about how value holds up over time. And when you zoom out, the long-term picture says it all. Bitcoin has trended upward over time, while the purchasing power of the dollar has steadily declined. And that's exactly why many see Bitcoin as one of the strongest reserve assets.